What happens when an economist TV star promises to blow up the central bank, dollarize your money, and take a chainsaw to government spending? In Argentina, under Javier Milei, Austrian school ideas move from theory to shock therapy reality. And the results are nothing short of astonishing. Welcome back to Bear Economics. We're diving into how Austrian economics reshaped Argentina's economy in just over a year. We'll trace Milei's campaign promises, core Austrian principles behind his radical agenda, the economic roller coaster before and after his election, and analysts' forecasts if he stays on course. Stick around. By the end, you'll see whether this real-world test provides the power of sound money and free markets. Let's get into it. So who is Javier Milei and what were his promises? Javier Milei, a 53-year-old economist turned TV pundit, was swept into power in November 2023 on a libertarian platform built on Austrian economics. His rallying cries included blow up the central banks, immediate dollarization, and slashing government down to police, courts, and defense. Only the so-called minimal state. He even carried around a giant $100 bill on stage to pitch replacing the peso with the US dollar, a symbolic promise to end decades of chronic inflation. His Austrian economic principles: sound money, fiscal austerity, and free markets. So the sound money, Austrians argue that fiat central bank money leads to malinvestment and inflation. Milei's plan: abolish the central bank and ditch the peso. Fiscal austerity, cutting subsidies, freezing pensions and wages below inflation, and deep tax cuts to restore a balanced budget. Free markets, privatize state enterprises, scrap price and foreign exchange controls, and deregulate labor and rent markets to let prices clear freely. The key forms he implemented. First up, omnibus reform law, hundreds of measures, including tax cuts, labor and trade liberalization, passed within weeks of inauguration. Dollar peg and IMF package. He secured a $20 billion standby agreement to back up a crawling peg to the dollar, halting the peso collapse. Subsidy and phase out. Energy and transport subsidies cut, driving immediate fiscal savings. Rental market reform. Quarterly leases and dollar pricing doubled available units and eased housing costs. Privatizations and deregulation. Dozens of agencies closed or merged. Export taxes abolished to spur agribusinesses and mining investment. Before and after economic indicators. It went from a staggering 211% annual rate in 2023 to just 1.5% month over month by May 2025. That's crazy. Currency gap. Black market peso dollar spread narrowed from 50% plus to under 10% as official peg held. Fiscal balance. First monthly surpluses since 2008, thanks to spending cuts and subsidy removal. GDP growth. After a 2% contraction in 2023, Q 2025 saw a plus 7.6% year-over-year growth. Investments. Country risk index at 5-year lows. The stock index up 150% in 2024, and new energy and mining projects announced. The OECD, plus 5.7% GDP growth in 2025, strongest in the region. BBVA and IMF, plus 5.5% growth forecast. Inflation trending to 30% year-end 2025 from over 100% a year earlier. Investor sentiment. Emerging market funds overweigh Argentine debt, citing a turn-the-corner opportunity. These forecasts hinge on Milei maintaining fiscal discipline, honoring IMF terms, and continuing structural reform. If he does, Argentina could finally break free of its crisis cycle and deliver growth rates unseen in decades. Argentina's bold Austrian experiment is unfolding before our eyes, from hyperinflation to stability, from deficits to surpluses. Whether you see it as a triumph of free markets and ideas, or fear the social costs, the data shows one thing: Austrian economics has made a real-world impact. Thanks for watching Bear Economics. If you found some value, hit like, subscribe, and ring the bell for more no-fluff analysis of economic ideas in action. I'll see you in the next video.